Hello everyone, welcome back. In our last video, we spoke about why you need to invest in US market and why it is essentially to look beyond India. Today, we are going to discuss some basics around US market, right? What are the indices over there, how you should invest over there, what are the timings, circuit filter, insurance, fractional shares and whatnot. So let's get started. In India, our stock exchanges are NSE and BSE, right? The National Stock Exchange and the Bombay Stock Exchange. Similarly, in US, you have NYSE and NASDAQ. So these are the two stock exchanges that we have in each jurisdiction. Let's understand the timing. So what are the market timings in India? It's generally 9:15 a.m. to 3:30 p.m. What is it for US? They start at 9:30 a.m. US time till 4 p.m. US time. So what about Indian investors who want to trade in US sitting in India? The timings for us are 7 p.m. in the evening to 1:30 a.m. midnight. By the way, NYSE is the oldest and the largest stock exchange established way back in 1792. NASDAQ came in 1971 and it is the biggest and most largest electronically traded stock exchange, right? So that's great. Let's just compare the size of India markets versus the US markets. The India market capitalization or the India GDP as we call is $3 trillion, right? I mean, that's great. But what would be the NYSE market cap? That's $25 trillion. How about NASDAQ? That's $20 trillion. So they are way bigger than what our Indian GDP is, right? You have a whole lot of things, whole lot of stocks that you can go and buy. So the major stock indices in India are Sensex and Nifty. Of course, we know that, right? So Sensex is for BSE and Nifty is for NSE. What about US? What are the major stock indices in US? It's S&P 500, NASDAQ, Russell 2000 and Dow Jones, right? So you can actually go and trade on all these indices or buy an ETF of these indices and have an exposure to the largest market of US. Now just let's understand a little bit on circuit filters. How in India we have the circuit filter, when there is a price action, the market stops, right? So I mean, in a day, if market falls by say 10%, market is halted for a couple of hours. If it falls by 15%, it is again halted for a couple of hours. And then if the market falls by 20% in a single day, the trading is stopped for that particular day, right? What are these limits back in US? It's 7, 13 and 20, right? So this is all about circuit filter. So now one very interesting point on this. Fractional shares. What if I like MRF as a company, but I'm not able to invest in its share because one share is 80,000 rupees, right? That's a whole lot of money. Can I buy like 1/10 of the share of MRF? Unfortunately, you can't buy 1/10 of the share of MRF in India because in India, the minimum share of any company that you need to buy is at least one share. But in US, you can buy fractional shares, right? So for example, if like Berkshire Hathaway and the per share is very big an amount, I can just buy a small amount of Berkshire Hathaway and still own that company, right? That's an amazing part of differentiation between India and US. Another part of differentiation is insurance, right? What happens if my account is hacked? Do I have some insurance in India? Do I need to take some insurance and pay more to a regulator or somebody in India? Maybe. But in US, this is amazing because SIPC, which is regulated by US, gives you an auto insurance on your broking account, right? So about $5 lakh, right, which is $500,000 of insurance is auto linked to your account. And that's for the securities, right? You have another $250,000 for uninvested cash that is lying into your account, right? That's an amazing benefit because, well, sitting in India, you can invest there in fractional shares and still be protected about hacking, about theft, etc. So if you want to stay updated about more such interesting themes and ideas, do subscribe to our channel and visit www.easternfin.com. Stay tuned.